Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Craig Erlam, who is Senior Market Analyst at Oanda. How are you today, Craig?
I'm very good. Very good. How are you?
Very well. Looking forward to the Fed tonight, see what Miss Yellen has to say for herself. But in the meantime, let's look at the markets and Euro Sterling. Well, Sterling strength continues. Where does it go from here?
Yeah, this one doesn't have much to do with the Fed, but we are just we're at quite an interesting level right now because we came back below that 50 fib. I think in the longer term, more people are confident that the euro strength is going to prevail. So this little correction that we've seen, I think is a welcome correction by the markets. I think traders generally like corrections because if they still have confidence in the overall trend, then what this effectively offers, if you're, say, a bullish trader in euro sterling, then this offers opportunity. But then, of course, as always with trading, there's two things you've got to work out. Where am I getting out? But also, where's the best place to get in? Where you're maximising your opportunity. So we've come back towards the 50 fib, and it looks like there's been some buying interest there around 88. But now we've come up and we're testing around that 88, 75, 89 level, prior zone of support. It looks like we've run into a little bit of resistance right there now. My inkling is that we're going to see a little bit more of a correction. I think 87 is a far more interesting level. Because we took out the 50 fib initially, it looks as though it was a little bit soft, but you come around the 87 level, it's prior zone of support, you've got the 61.8 fib, you've got the 200 to 233 day simple move on average, and if we get back to that level, then I think that's going to be a very key level of interest. That's going to give us a very clear insight into whether this is the correction a lot of people have been waiting for. Understood.
And the indicators are telling us, is there any confirmation on those?
Not really on the bottom. I think you'd have to go down to the 4-hour, 1-hour charts to get some confirmation from them, or at least some signals in terms of are the divergences forming, is the momentum dropping out the move. There's not too much to read from them on the daily chart at this moment in time. And like I say, if we break above the 88 level, then that would suggest that we are heading on higher. But if we do pull back and it looks like we've found some resistance, then I think 87 is key.
Understood. And looking at cable, again, the great British pound versus the dollar. Again, obviously the pound has been strengthening, but we've also seen some, obviously, dollar weakness. Where does it go from here? I mean, this 135 level, a few weeks ago, it seemed a long way off, and we've got there very, very rapidly.
Yeah, 134.50, 135 was the next target, I guess you could say, for the pair, and we went straight through there on these this promise of or potential for a rate hike. We've come up to 136. Cable seems to like to move in those twos, 128, 130, 32, 34, 36. 38 therefore seems like the next logical level of resistance if we do push above here. Should we get that rate hike? I'm sceptical as to how far we can go on this because, I mean, this 138 to 140 zone, this is pre-Brexit lows. These are the levels we were hitting when there was a little bit of fear that Brexit was brewing in the markets, and then we'll come back to these 138, 140 lows, and then rebounding higher back towards 150 eventually. So a break above there just seems a little bit far-fetched at the moment because ultimately we are just in the midst of Brexit. We're in the midst of the slowdown, the consumer squeeze is still happening, and there's still a huge amount of uncertainty. So even with this one rate hike, I find it hard to believe that we're going to see too much of a dramatic move higher. But like I say, 136 is the upside now, 136.20. 138 above there is a logical level, but don't be surprised if we see 134s and 132s tested to the downside.
Understood. And finally, dollar yen, a favourite pair of the FX traders. This 110 level, we're kind of anchored around it, but it seems to have broken a little bit higher of late. Can that momentum continue?
Looking at the broader trend, you'd have to say yes. I think the dollar in particular is going to be an interesting driver of this because the dollar broke to the lowest since 2015 from a dollar index perspective. It looked as though it was potentially going to catch a little bit more weakness. It was already looking a bit overstretched, big sell-off throughout the course of this year, but they didn't gather any momentum below that major zone of support. When you look at 2.5 year zone support and it doesn't catch any momentum from the break, that tends to be a sign of exhaustion. Exhaustion can come in the form of the momentum slowing, but it can also come in the form of key levels being broken and not capitalised on. And this one wasn't capitalised on. So I'm wondering if we're going to see more of a broader dollar correction. We're seeing it more clearly in the dollar yen compared to the euro dollar and cable pairs. But I think, broadly speaking, we're just still range bound here. We've got 114.50 to the upside. We've got 108 to the downside. We briefly broke below there on risk aversion, but instantly we've just rotated higher. The cloud, once again, just offers the midpoint. If we break above the cloud with the lagging line following, it looks like we're heading back towards the 114.50s. If we rotate lower, we could be looking back to the 108s. But really, until we break out of this range, you're just looking at upper end 114.50, cloud in the middle, and the lower end around 108.
So trade the ranges. Well, on that note, Craig, thank you very much for joining us today.
Thank you.